Welcome to Day 3 of the 25-day series of Understanding Financial Concepts. Today, we'll explore operating income. Chapter 1. What is operating income? Imagine a company like Tata Motors. Their core business is manufacturing and selling automobiles, cars, trucks, buses. They also dabble in financial services and investments, but let's focus on the heart of their business: selling vehicles. Profit they make from this core activity, after covering costs, but before paying interest and taxes, is their operating income. Now, think about Apple Inc. They earn money from various streams, but primarily from selling products like iPhones, iPads, and Macs. Profit from these core products is their operating income. It's the core engine driving their financial success. Chapter 2. Connection to previous topics. Remember gross profit? Operating income is the next step. After subtracting operating expenses like wages and rent from gross profit, we arrive at operating income. It's like peeling back another layer. Understand a company's profitability. Chapter 3. Importance of operating income. Operating income is crucial. It shows how well a company is doing in its primary business activities. It's a key indicator of operational efficiency. If a company has strong operating income, it means they're running their core business well. That's a quick look at operating income. Understanding this helps you evaluate a company's core profitability. If you found this video helpful, please like the video and subscribe to the channel. It's free for you, but helps us a lot. Stay informed, stay ahead.